to your point as well, I wouldn't say that we know whether the last episode is or is not a good model for what happened. You pointed out we've just been through a period of high inflation. We've just gotten through that period. That's a difference. There was also quite a bit of diversion of trade away from China to other countries since that. That may have effects. I don't know. I just think we need to take our time, not rush, and make a very careful assessment, but only when we've actually seen what the policies are and how they're implemented. And we're just not at that stage. We're at the stage of doing what other forecasters are doing, which is kind of thinking about these questions, but not trying to get to definitive answers for some time.
Nick.
Nick Timmeros of the Wall Street Journal. Chair Powell, to make sure I understand, participants today revised up their core PCE inflation projection for 25 so that the central tendency runs from 2.5% to 2.7%. And as Howard noted earlier, most of the committee sees the risks to those projections to the upside. So if inflation only declines next year from 2.8 to 2.5 to 2.7, what would compel the committee to be cutting in that situation?
Let me find these numbers. So we have these numbers. We have inflation coming down, core inflation coming down to 2.5 next year. That'd be significant progress. You see a slower path. I think that does take.
Yo.
We want to see real progress, but we'd be seeing meaningful progress to get inflation down to that level. That wouldn't be all the way to 2%, but that would be better than this year. This year will be 2.8 or 2.9.
Dustin, can you guys hear me?
We also have to think about the labor market, and while we have the labor market forecast as being in good shape, we are also mindful that it is still out there very gradually cooling so far in an orderly, gradual way. But it's also something we need to keep our eye on.
I guess if I could follow up, if somebody looked at these projections and also the insertion of the extent and timing language in the statement, which has been used at times in the past when the committee thinks maybe it's going to be on hold for a while, and they said, gee, this looks like it could be the last rate cut for some time, would they be mistaken?
Can you guys hear me? Hello?
To infer that?
So that's not any decision that we made at all. Let me explain extent and timing. So
Can you guys type
the
yes
sense
if
of
you
that
guys could hear
word
me?
is to make clear that if the economy does evolve about as anticipated, we're at a point at which it would be appropriate to slow the pace of rate cuts. So extent, that just relates to how much further we can reduce our policy rate consistent with getting to a neutral stance. Clearly that distance has shrunk by 100 basis points. So it's significantly smaller. So that's the extent question, and we're going to be looking for further progress on inflation as well as a strong labor market to make those cuts. Timing just suggests
Yeah,
that
Fed
we're at a
lowered
place
interest
where
rate by another 25
assuming
base
the economy
points.
develops as expected, we're near a level that
brings the
will make
rates
it
down
appropriate
now.
to slow the pace of adjustment. So that's what we mean by that.
To
We're not trying to make decisions about
4.25
the
to
longer run.
4.5%.
We're trying to make sensible
I'm still
policy
trying to
as we
catch
go.
up.
And I just would emphasize the uncertainty, which is it's just a
So yeah,
function
the
of
Fed
fact
has
that
lowered
we
rates
expect
by a
significant
full
policy
100
changes. There's
BPS in
nothing
2024.
really
That's
unusual about that.
crazy.
I think we need to see what they are.
3.9% on the median interest rate projections at the end of 2025.
When that happens.
Michael McKee from Bloomberg.
Slower pace of cuts in 2025 are coming off the assumption that inflation will be higher and would be expected to move higher. So he's expecting inflation to increase.
You say you're
Dumping!
significantly restrictive.
Markets are
Are you
dumping.
running a risk that the markets are fighting against you and the economy could be more at risk of
Hit
a
that luck
slowdown
button,
than
ladies
you
and gentlemen,
anticipate?
so we can get this started.
So the rates that you talked about are really longer run rates, and they are affected to some extent by Fed policy, but they're also affected by many other things. And longer rates have actually gone up quite a bit since September, as you well know, and those are the things that drive, for example, mortgage rates more than short-term rates do. So we look at that, but we look at all financial conditions, and then we look at what's happening in the economy. So what we see happening in the economy, again, is most forecasters have been calling for a slowdown in growth for a very long time, and it keeps not happening. So we're now well into another year of growth that looks like it might be 2.5%. Second and third quarters were right about at the same level. So the U.S. economy is just performing very, very well, substantially better than our global peer group. And there's no reason to think a downturn is any more likely than it usually is. So the outlook is pretty bright for our economy. We have to stay on task, though, and continue to have restrictive policies so that we can get inflation down to 2%. We're also going to be looking out for the labor market. We want to keep the labor market pretty close to where it is. We're pretty close to estimates of the natural rate of unemployment. Job creation is a little below the level that would keep it there, but nonetheless close. And so that's what our policy is trying to achieve.
If I could follow up by asking about your formulation for beginning rate cuts.
Hit that like button and I'll remove that text.
We need to have confidence that inflation is moving down towards our target. Given the fact that you've raised your forecast for next year, do you have confidence, or are you uncertain about the path of inflation going forward?
So confidence was our test for raising rates, and we made look at the broader suite. We've made just a great deal of progress. We're well into the twos in core inflation, and around 2.5 or even lower than that.
He's killing small businesses.
For headline inflation. So I would say I'm confident that inflation
1.4 trillion in credit card debts. I don't know, man. U.S. economy is booming.
Well, and I'll tell you why. You do see with housing services inflation, which is one that we've really worried about, it really has come down now quite steadily at a slower pace than we thought.
Basically, in other words, I'm cutting rates no more. Sell your stocks, take your gains, and pay taxes.
Market rents start to equilibrate better with new leases that turn over. Not new tenants, but new leases. Market rents is new leases. So that's happening. That process is ongoing.
Is it just me, or does he sound not very convinced when he said the economy would be okay?
It has returned right to the range where it was before the pandemic. Just for some months this year, it kind of moved up in a bumpy way because of used cars and things like that. But we think overall that should generally be in the range it was in. That leaves non-housing services and market-based.
I mean, just think about it, ladies and gentlemen. Yield curve,
non-market services, and those are
the yield curve inversion. SOM rule is triggered. Inflation increasing. Unemployment is increasing. Personal debt is increasing. Like I said, credit card debt, 1 point whatever it is trillion.
Financial services, which is really done off of asset prices.
And delinquencies.
And
I guess the economy's great, right?
So the overall picture,
the only
why inflation should be coming
way to
down
look at this is
still
the stock
intact.
market.
In particular, the labor market. Look at the labor market. It is cooler by so many measures now, modestly cooler than it was in 2019, a year when inflation was well under 2%. So it's not a source
very
of
hawkish
inflationary
questions,
pressures.
though.
Not
Very
to say
hawkish.
there aren't regional and particular professions where labor is tight, but overall, you're not getting inflationary impulses of any significance from the labor market. So what's the story? The story is still just we're unwinding from these large shocks that the economy got in 2021 and 22 in, for example, housing services, and now also in insurance in particular, where costs went up, and those are now being reflected later
Dang.
in housing insurance.
Big
It's real
hit.
inflation, but it doesn't portend
S&P is getting a big hit.
persistently high inflation. So we and most other forecasters
Big,
still
big,
feel
big,
that
big,
we're on
big
track
hit.
to get down to 2%. It might take another year or two from here, but I'm confident that that's the path. we're
ES
on,
futures
and,
are
our
about to take out last week's
will
lows as
do
well.
everything
That's
it can to
crazy.
ensure that is the case.
Colby.
Market is tanking, man. Well, at least that's fitting into our bias.
Thank you, Colby Smith with the Financial Times. So the unemployment rate as
Perfecto,
of November, while
perfecto.
still very
We
low,
got
is
this. We
within
called this,
spitting
man. We
distance of
called
the level
this.
that generated a lot of concern about the labor market over the summer.
We called this
in
on the
lead up to
spot.
the 50 basis point cut
I
in
knew this would
September.
happen.
Hiring has also narrowed to just a handful of sectors. But now the committee appears comfortable skipping cuts at upcoming meetings. So what has changed about the committee's assessment of
Bring
the
it on,
risks
baby.
confronting
Bring it
the labor
on.
market?
I
Is
warned
there just
every
less
single one of
concern
you. I
now,
warned
on
every
that
single
front?
one of
Or is
you.
it just about there being more upside risk to inflation that now needs to be accounted for?
The unemployment rate is now the same as it was in July, 4.2%. It's moved up and
I
down,
warned you.
but it's
I
now the
warned
same
you.
as July. And job creation is lower than it has been, but it's been steady. It's not declining. It's in steady at a level which, as I pointed out a couple of times, is actually below the level that would hold the unemployment rate constant, but it's not so far below. So you might if we have the break-even level right, and if job creation continues at that level in the establishment survey, then you would get a tenth maybe every other month kind of thing. So gradually declining. We don't have that kind of precision in this. So you're right, though. And I read out some of the reasons. We do think the labor market is still cooling.
Beautiful, beautiful,
and
absolutely beautiful.
It's not
S&P is
cooling
tanking, man.
in a quick or in a way that really raises concerns. I think you pointed out participants. in
Yes,
FOMC
futures is also
really
taking
thought
out
that
its
the risks
previous
and
low. This is
uncertainty had improved
crazy.
relative to the labor market, and it's because things have just gotten a little bit better. It doesn't unemployment rate flat and things like that. Nonetheless, we're watching it closely.
If the idea, though, is that no additional kind of softening the labor market is welcome here, what's to prevent that from happening if rates are still restrictive?
So what I said is we don't think we need further
All I hear
softening
is,
to get to 2% inflation. That's what I'm saying. Not that it's not welcome. We don't need it. We don't think. If you had a situation where inflation
I don't know if this is even dovish language, man.
That's we'd have to weigh that. against
Powell sounds
the fact
stressed
that
out.
Inflation has in recent months been moving sideways in the 12-month window. And so we've got to weigh them both. And at this point, for a while there, we were only really focused.
VIX is spiking
mainly focused
11%.
on inflation.
Ooh, back
We've
to the
now gotten to a
17s.
place where the risks of the two are, we think, are roughly in balance. And so that's how we think about it.
Steve.
Mr. Chairman, I did not hear you use the word recalibration today. And I'm just wondering if the recalibration phase is over and what you might call this new phase and whether the criteria for changing rates is somehow different and higher than it was before. Thanks.
We're not renaming the phase yet, but we may get around to that. But no, I would say we are, though, in a new phase in the process, as I said. So, and that's just because we've reduced our policy rate by 100 basis points. We're significantly closer to neutral. We still think where we are is meaningfully.
What do you guys think? Hawkish or
and I
dovish?
think from this point forward, it's appropriate to move cautiously and look for progress on inflation. We've done a lot to support
Too many
economic
hawkish questions,
activity
though,
by
man.
cutting 100 basis points.
SPY's
And,
down 1.3%.
That's a good thing.
Wow, man, markets are getting
I support
hit.
the decision, and I think it was the right decision to make. I think from
Crazy.
now, we are in a place where the risks really are in balance, and we need to see progress on inflation, and that's how we're thinking about it. So it is kind of a new thing. We moved pretty quickly to get to here, and I think going forward, obviously, we're going to be moving slower, which is consistent with the SEP.
I wonder if I could follow up and ask you how much you or the committee are looking through some of the high numbers we've had in the recent inflation numbers. For example, cars being up maybe because of the hurricanes, eggs because of the avian flu, that kind of stuff, and then looking forward perhaps to housing inflation coming down as it did in the recent reporting.
So we always try to be careful about not throwing out the numbers we don't like. It's just an occupational hazard is to look. Those high months are wrong. What about the low months? We have a very low month potentially in November. It's estimated.
We'll go over their charts
by
very
many
soon.
to be in the mid-teens.
I want to listen a
for
little bit
PCE.
more.
So that could be idiosyncratically low. We try to look at not just a couple or 3
Man,
months. We
this
should
dude,
our
it's getting
position
smashed.
shouldn't change based on 2
Wow.
or 3 months of good or bad data. We have a long string now of inflation coming down gradually over time. As I mentioned, 12-month, I think it's 12-month headlines 2.5, 12-month core is 2.8. That's way better than we were. We still have some work to do, though, is how we're looking at it, and we need policy to remain restrictive to get that work done, we think.
Neil.
Thanks, Chair.
Too hawkish, man. Too hawkish.
Neil Irwin from Axios. Financial markets have been very buoyant really all year. Is the committee comfortable with where financial conditions are, or do you see a risk that looseness in financial conditions could undermine progress on your inflation target?
So we do look carefully at financial conditions, of course, that's part of what we do, but we really look carefully at is the performance of our goal variables and how are we affecting the economy. So what we've seen over the course of, just take the last year, we've seen inflation over the last.
Welcome to the live stream, ladies and gentlemen. Make sure to hit that like button. Subscribe to the channel if you haven't already. We're going to go over the charts in just a moment. Just want to listen to a little bit more.
At the parts of the
Money Vest Index, I'm looking at it right now as well.
That are interest sensitive, like particularly housing. Housing activity is very low, and that's partly significantly because of our policy. So we think our policy is working, it's transmitting, and it's having the effects on our goal variables that we would want. A lot of things move financial conditions around, as you know, and we don't really control.
He needs to change his tie color, man.
The effects we're hoping to see on the goal variables and the places.
Someone throw a shoe at him if you want the bull market to continue.
Assets that have
Throw a shoe.
Do you see any value or benefits in the U.S. government building a reserve of Bitcoin?
We're not allowed to own Bitcoin.
Oh, here comes Bitcoin. Here comes Bitcoin. Quiet, guys.
A law change. That's the kind of thing for Congress to consider, but we are not looking for a law change at the Fed.
Andrew.
It's bloodbath, bloodbath.
Yeah, happy holidays, Mr. Chairman. Thanks for taking our questions. I was wondering if you are satisfied with the way 2024 is ending, if you're confident that we avoided the recession.
Told you guys. I told you this is happening.
Forecasters were predicting as inevitable a couple years ago.
Ring the bell.
I think it's
Ring it.
pretty clear we've avoided a recession. I think growth this year has been solid. It really has. PDFP, private domestic final purchases, which we think is the best indicator of private demand, is looking to come
Wow,
in 3%
man,
this year.
dude, stocks are getting
This is a really good
hit.
number. Again, the U.S. economy has just been remarkable, and it's in these international meetings that I attend, this has been a story, is that how well the U.S. is doing. And if you look around the world, there's just a lot of slow growth and continuous struggle with inflation.
Where's Trump when you need him at the New York Stock Exchange to ring the closing bell?
The economy, and we want to keep that going.
The other thing I just wanted to ask about was the you guys have noted that the unemployment rate is still low. However, employment rates have fallen rather quickly. The prime age employment rate has fell by about half a percent rather recently. The question, I guess, is do you think there's maybe more downside momentum in the labor market than the unemployment rate alone is signaling?
I don't think so, no. I think overall, if you look at it, prime age participation is still very high. What's going on in the labor market is that the hiring rate is low. So if you have a job, you're doing very well, and layoffs are very low, right? So people
Avoided
are not
the
losing their
recession,
jobs in
it's
large
funny.
numbers, unusually large numbers. If you are looking for a job, though, the hiring rate is low, and that's a signal of lower demand. It has come down. So we look for signs like that, and that's clearly a sign of softening.
BTC dumping? Let's look at BTC. Wow! Oh my God, dude!
Ongoing gradual softening in the labor market. Again, that's something we need to see to get 2% inflation.
Good luck, bulls.
And that's part of the reason that explains why we moved ahead today with the actions.
Too
with
funny,
an additional
man.
cut.
3% drop just on the
But
past
you take a
15
step back,
minutes.
the level of unemployment is very low. Again, participation is high. Wages are at a healthy and ever more sustainable level. Wage growth, and so the labor market. This is a good labor market, and we want to keep it that way.
Ha ha ha. Beautiful, beautiful.
From Bloomberg News. I just want to put a finer point on the labor market.
You guys thought I could be bullish forever?
This way, in the strong position that you have described, without further cuts. In other words, do you still view the labor market as needing support to
Hit that like button, ladies and gentlemen. We're going to start the live stream very soon.
We can't know that with any tremendous certainty. I will say that we think that our policy balances the risks. We think the risks are roughly in balance as between the two mandates, and we think the labor market is in solid shape. And when I say it's softening or cooling, it's a very gradual process. job creations are meaningfully positive. Wages are, if anything, still a bit above what would be sustainable if productivity were to revert to its longer run trend. If you take into account the high productivity readings we've had, then wages are already at a sustainable level relative to 2% inflation. So, I don't want to overstate the downside in the labor market, because the downsides clearly appear to have diminished. Nonetheless, it's one of our mandate goals, and we pay close attention to it, and it's worth noting that it is still gradually cooling, gradually and in an orderly way. And that's how I would characterize it, and that's why we're paying careful attention.
Elizabeth.
Thanks so much, Chair Powell. Elizabeth Schulze from ABC News. As you've noted, the Fed is now forecasting higher inflation next year. High prices are still a burden for so many households right now. Why do you think it is that inflation is proving to be more stubborn than you'd expected?
18 on the VIX isn't necessarily high. Over 20 is going to be the biggest concern.
Many people were saying that to get this far down, we would have had a deep recession and high unemployment by now. Well, that has not been the case. So, the path down has actually been much better than many predicted. We've managed to have the unemployment rate remain essentially at its longer run natural rate, while inflation has come down from core PCE inflation has come down from 5.6% to 2.8% on a 12-month basis. So that's a pretty good outcome. Why hasn't it come down? One reason is that just a technical issue around the way we calculate housing services, and that process has been slower.
Get ready for your favorite influencers to start making motivational quotes on how they were always going to be bullish forever. This is the time where you got to be the most cautious. It's going to be extremely volatile going into these wave 3, 4s.
Not high inflation. So we understand very well that prices went up by a great deal, and people really feel that.
Dollars increasing like hell.
Transportation and heating your home and things like that. So there's tremendous pain in that burst of inflation that was very global. This was everywhere in all the advanced economies at the same time. So now we have inflation itself is way down, but people are still feeling high prices, and that is really what people are feeling. The best we can do for them, and that's who we work for, is to get inflation back down to its target and keep it there, so that people are earning big real wage increases.
My God, it's
so
bloodbath.
Their wages are going up. Their compensation is going up faster than inflation year upon year upon year, and that's what will restore people's good feeling about the economy. That's what it will take,
Absolutely
and that's what we're aiming
beautiful.
for.
And as we look
Absolutely
ahead to
beautiful.
next year, what do you see as the biggest challenge to the economy under the next administration?
I feel very good about where the economy is. Honestly, I'm very optimistic about the economy.
The nail in the coffin, brothers.
It's we're in a really good place. Our policy's in a really good place. I expect another good year next year.
Edward.
Thanks, Chair Powell, for taking the questions. Edward Lawrence from Fox Business. So you say that we're closer to the neutral rate. What percent do you see in the committee believes? Where's the neutral rate?
So,
In good news,
I'll say a couple things. First of all,
there will always be
when
buying
we write down in the
opportunities.
summary of economic projections is the longer run neutral rate.
Oh my God,
which is
it
the
just
neutral rate
keeps
At
going.
a time when supply and demand are in balance, the full economy is in balance, and no shocks are hitting the economy. That is not
Wow.
where we are right now. So
Brutal,
when we're
man.
making monetary policy at the Fed, that's not the question we're asking. So you can't do a straight read between those longer run numbers that we write down and what we think the appropriate policy should be. So basically, at any given time, various shocks are hitting the economy. And so what we're doing in real time is we're looking at our policy stance, and we're looking at the way it's hitting the economy, and particularly we look at the effects it's having as we try to move the economy toward maximum employment and price stability. And the answer can be there are things that affect the economy that are lasting, but not permanent.
Wow.
And the ones that are permanent are the ones that would be in our star. The ones that could be lasting, but nonetheless go away over time, they could actually affect what's sort of technically the appropriate neutral stance.
He's kind of contradicting himself here, though.
So we're looking at that, and we don't know exactly where it is, but as I like to say, we know it by its works. And I think what we know for sure is that we're 100 basis points closer to it right now. There are many estimates of where that might be, and we know we're a lot closer to it. And I think we're in a good place. But I think from here, it's a new phase, and we're going to be, cautious about further cuts.
But I think that the markets are looking for a little more clarity. I mean, I've heard estimates from 2.9% to 4%. I think the markets would like to see a little more clarity about a year out, 18 months out, as to where that goalpost, for lack of a better term, is. Because at the moment, it looks big.
Yeah, I mean, honestly, there are countless models of what a neutral rate might be at any given time. There are empirical models, there are theoretical models, there are things that combine them, and they have as many different answers as you'd like. So there is no real certainty. And I mean, it's actually a good thing to know that we don't know exactly where it is. So you're not tempted to think, oh, I think this model or this estimate is right. You just have to be open to
First
the
green candle coming
data
in.
that are coming in, and also how it's affecting the outlook. And it's not made any easier by the fact that that our policy works with long and variable lags. Nonetheless, that is the job we have, and so I think we need.
Sea of red.
It's appropriate for us now to proceed cautiously. Now that we're 100 basis points closer to neutral,
Just doesn't want to stop.
We'll do so. Meanwhile, the economy seems to be in good shape. And these cuts will certainly help to support economic activity and the labor market, while we can still make progress on inflation because policies.
You know what's crazy? The VIX move is absolutely stunning. It was below 15 and nearly up to 20 in just 2 hours.
I just wanted to make sure I understood what you were saying at the beginning about inflation. Are you saying that progress on core PCE counts as progress on inflation, even if headline inflation ticks up? And then also, since that's what's projected in the SEP, I was wondering.
This is becoming the biggest candle of the range
why do you all
soon.
See core PCE going down and potentially headline inflation ticking up?
So, and as I imagine the goal.
Now I want to hear him
overall
talk
is
about
headline
Luigi.
inflation, because that's what people experience. People don't experience core inflation; they experience inflation, and that includes food and energy costs. So that's the overall goal. But as we know, headline inflation contains energy and food, and those prices can fluctuate for reasons that are not related to tightness in the economy and therefore are not really good predictors of future inflation. So it turns out that core inflation is a better predictor of overall inflation than overall inflation is. So we look at core inflation because it's a better measure of what future inflation is likely to be because it's a better measure of what inflation pressures exist. So it's complicated, but ultimately our goal is headline, not core. So
Everything's down.
Your second question was what?
Why do you all see core going down but headline potentially ticking up?
So headline can be affected. You're talking about next year.
Mm-hmm.
Yeah, so headline can be affected by energy prices and food prices. So
Man, people are asking the same damn questions, though.
In the headline forecasts that are to do with forecasts of energy prices, whereas core will be, if you look at core going out a full year, then it'll be
People
much
are
more
hung up
driven
on
by
inflation today for
things
sure.
like tightness in the economy. So that's why the two can go in different directions. Headline has been lower, as you know, most of this year. But that's because energy prices have been coming down, which is a great thing for people. But energy prices will come down and they will go up, and it won't really be telling us anything about how tight the economy is and how future inflation will perform.
Do geopolitical risks factor in at all to how you're thinking about energy prices?
So we monitor geopolitical risks really quickly, but really carefully rather. But I would say so far those risks haven't really. Nothing has come out of those risks that has really been important for the United States economy. The single thing that you would look to is the price of oil, given that we're talking about the Middle East and Ukraine, but that is a good summary statistic for the kind of thing that could go wrong with global turmoil. But the price of oil has been coming down, and because of global supply conditions. So the U.S. is not feeling really the effects of geopolitical turmoil. But we are certainly at a time of elevated geopolitical turmoil. And
Anyways, bottom line
risk.
is that the 0.5 cut in September was a massive screw up.
Thanks, Chair Powell. Kelly O'Grady from
Inflation
CBS
came
News.
back
I want to go back to
and
something
it bit
that
him
you
in the
said
ass,
a minute ago, that wage growth
just like people
is
said it would.
outpacing inflation now. It wasn't the case for some time, of course. It's partly why Americans haven't felt much relief
In my opinion,
their wallets from prices
insider
yet.
traders
But
are
with inflation
already out of
ticking
this.
up, how worried are you the progress in closing that gap could go away?
Yeah, so inflation, again, we don't overreact to a couple of months of higher
Holy
readings or a
shit,
couple of months of
is it
lower
still going
readings.
down?
And what we had was we had 4 months of really nice readings, and then September and October were higher.
Well, if you shorted today,
but then
congrats.
November is much lower. So I don't really think the public is experiencing that as a surprising upside risk to inflation. I think inflation is much lower. What the public is feeling, and they're right about it, is that prices are just, the price level went up because of the past inflation. And it's going to take some time for real wages to recover over a period of years in which.
For those that are just joining,
your
please hit that
real
like button,
compensation is
subscribe to the
growing.
channel if you haven't already.
In other words, your compensation is growing meaningfully faster
We'll
than
get this
inflation.
started real
That's
soon.
exactly the kind of
Real
economy
soon. I
we
just want to
have
hear a little
now.
bit more.
And we just want to hold on to it. That process will probably take some years, but that's what's going on right now. And I don't think that a couple of months of higher inflation really signal that anything of the nature you're suggesting.
And just one follow-up. Let's look more long-term. You previously predicted hitting the 2% inflation target in 2026. It's now been pushed out to 2027. You said you're focused on enabling further progress on inflation. That's not necessarily progress in the right direction. Are you confident that target isn't going to move further out?
We're talking about when you're projecting the economy, 3 years out, 2 years out, you're talking about high uncertainty. Very high uncertainty. We really, at that point, that's not possible to confidently predict where the economy is going to be in 3 years. So what we're doing is we're looking at what's happening now. We're kind of projecting that the same kinds of things are happening. So we keep a strong labor market. Housing services inflation comes down. Goods inflation settles down, and non-market services return to their prior level. All of those things should happen over time, and those pieces come together. There's every reason to think that they will. The timing of it is highly uncertain. But you're not wrong though that it's been a bit frustrating because while we've made progress, it has been slower than we had hoped. Nonetheless, we're still on track, and I think if 2 years ago you'd said we were at 4.2% unemployment and 2.8% inflation, people would say, "I'll take that." I mean, that's a pretty good interim place to be. Job's not done, but I think we're feeling good about where we are and where we're headed.
Go to Nancy for the last question.
All right, let's just listen to the last question. We'll go into the technicals.
Hi, Chair Powell, Nancy Marshall-Genzer from Marketplace. You said a couple times inflation has been moving sideways. Appears to be settling in around, 2.5%. Do you think the Fed is just going to have to settle for that and accept that you're not going to get to your 2% target?
No, we're not going to settle for that. I think we certainly have every intention and expectations that we'll get inflation back sustainably to 2%. That is,
All right, it's the same damn question. All right, ladies and gentlemen, welcome to the live stream. Thank you very much for joining. For those that are here, we just went over the initial questions of the FOMC. Nothing, it was to be expected, right? Closed the damn market. It dumped pretty hard. SPX pretty much printing one of the largest daily candles. Very interesting. But yeah, I've discussed this with some few individuals. We talked about the yield curve inversion, SOM rule being triggered, inflation increasing, unemployment increasing, personal debt increasing, credit card delinquencies. Is that a way to say that the economy is great? Or, is the stock market like Nvidia and, Tesla, is that the only marker for the general investor that the stock market is doing good? Long term, I don't know, man. I've also discussed this in my previous posts where we got to be very careful, especially at times of expansion phases when you're in, in Bitcoin, and times like these happen. You got to be very careful. But either way, yeah, the VIX is also spiking like crazy as well. So all right, let's get into the Elliott wave counts. For those that are just joining, make sure to hit that like button, ladies and gentlemen. Hit that like button, and also subscribe to the channel. So starting off with Bitcoin, nothing too much has changed. I'm sure you guys are in the know for what I was positioned for and also expecting. We were expecting a possible flat to be playing out. As you guys can see here, not only did we get that exact rejection zone at the 123.6%, we are now getting that rejection and we are now back into the median of this whole range. So what does this mean? Does this mean that the markets can recover? Absolutely possible, but is that a high probability? Well, in my opinion, I'm not sure. However, I am sharing this based on what I see from the charts. I have, over and over told you guys to be very cautious. The next few weeks, we're going to be areas and times of cautiousness and also making sure to be very careful about how these wave fours can play out. And that's why with each step of the way, I try to project based on the internal counts, whether it's corrective or looking impulsive in combination with the fundamentals, because I do have a pretty strong grasp on the U.S. economy, even though I am based in South Korea, and how that can tie into the technical price action. And right now we are kind of witnessing what we have been seeing based on this as well. So what does that mean? We are still seeing the possibility of a $90,000 to $80,000 to Bitcoin basically in the next few weeks. And that's just the beginning, in my opinion. And I'm not talking about this degree itself. If we are seeing this as a possible larger degree wave 4 in play, we are already going to be looking for a much deeper correction, meaning that if this wave 4 plays out on a higher degree, you're expecting even a larger correction. And I'm talking about, at least $75,000 to the $80,000 levels. Now, is that something to be scared about? No, because we've been talking about this for quite some time, right? We're going to be capitalizing on this last move to the upside. And then we reassess based on how far this wave 5 is going to be extending on the largest of degrees. Right now, we are in what is very confusing times for a lot of people. We're still seeing too many bullish posts where we're seeing a lot of people talking about whether BTC is able to just continue up forever. And no matter what, even with Michael Saylor, it is just a one-time event based on, certain time zones, but it can't go up forever. I mean, the market is not ran on infinite money, right? So this is why we have to be very critical about how we approach the markets in terms of whether we want to be neutral or not. And right now, that neutrality that I've been talking about is exactly what we are kind of witnessing. We've talked about possible one more high being created and an immediate rejection coming back into the median zone, and that is what we're getting. So short-term traders, rest in peace. A lot of you guys have been way too ego about BTC going up forever. And this is where I am starting to transition into being a more cautious bull than being a full-on bull, because we've been a full-on bull here. We've been talking about the nested 1-2 structures for the longest time. And look what's happening. It's now just showing that we are completing with this primary degree. And that was the biggest giveaway. The dead giveaway was this here, the largest expansion phase of the primary degree. And now that we have a higher termination point with wave 3 of whatever degree you may be putting it at, whether it's here or whether it's here, now it's starting to look very likely that's going to be here, that you need to be very, very careful. So yeah, that's what I'm going to put it here. And a lot of the information that I've given out was all pointing towards that. And even with the most equilibrium scenario for a wave 4 to be sideways, which is pretty low in probability as is anyways, of this possible running triangle, you still were expecting a pullback no matter what. And that is why we got to be on our toes. I mean, if you're in spot, you're still chilling, right? But I mean, when you're looking for a larger pullback, are you going to be buying Bitcoin at $100,000? I don't think so, especially if you have more contrarian goals of accumulating Bitcoin around at least $70,000 to $80,000. That's still expensive, but still, I mean, it's better than buying at $100,000, right? And that would be a 30-20% pullback. So, yeah, a lot of opportunities are on the rise. And when I start calling for a larger forward pullback, and a lot of people are going to be bearish at that time, is when I'm going to be bullish. That's why we play on the contrarian side, combine that with the techniques of the LA wave theory and the methodology behind it, and then that is how we price project on breakouts. We don't need to be looking for exact tops. We don't need to be looking for exact bottoms. We look for clues of the general direction that the LA wave theory helps us. And if you're able to divide the internal counts and also kind of combine that with the fundamentals that's happening, the market sentiment, and if you're seeing a little bit of too much extreme greed, maybe too much FUD, too much fear, then that also combines with how you may be looking on your forecast. If it's still in a bullish state, but it's in an extremely bearish sentiment, it gets much harder. But right now, it has lined up quite nicely. I mean, the crypto fear and greed index, if you just look at it, it's absolutely crazy, right? Let me pull it up. So if we look at it, I mean, last month was extreme greed. Last week was greed. Yesterday was extreme greed. Now it's still extreme greed. And if we look at the maximum level, the thing I like about the crypto fear and greed index is a fixed value between 0 and 100. And when there has never been a time where Bitcoin has surpassed, 100, right? I mean, you can't. And when you're in this kind of level here, you are in some serious risk, basically. Look at here, even being tapped here, we got a pretty big pullback. That was when we had that huge wave force sideways on the larger degree, the largest degree on the macro, right? And we just came back up and we're still stalling in these regions at the extreme greed. That's not the area you want to be accumulating Bitcoin, ladies and gentlemen. Absolutely not. You definitely want to, this is the opportunity of buying Bitcoin. Look, I mean, this is looking like just like the LA wave cycle view of how this was playing out since 2022, right? You want to be waiting for at least the neutrality, at least the 70-point level value of on the crypto fear and greed index. And then however this plays out, if it does go back into extreme fear, then you know that's going to be the utmost opportunity to at least accumulate or DCA your positions. So with that being said, BTC is in a very, very hot state right now. It is pulling back still. Not looking good, not looking good. It looks like some kind of impulse to the downside. 1, 2, 3, 4, 5, possibly for the first wave 1. Then I'm expecting this to be a wave C to be playing out, okay? And then that should be part of the expanded flat. Now that is our first area of interest, all right? We need to really resolve this area depending on how you're seeing this. Now, whether you're seeing this as a flat, whether you're seeing it as a triangle, these are the first areas of interest, whether you're seeing this level still as a support or maybe one last level of a possible diagonal, which is going to be a 1, 2, 3, 4, 5, but I'm not really seeing a 3-wave being created here, so we'll have to see. Maybe this is just another possible fake out where we just create another 3-way move and then we get that larger wave 4 pullback. This is even more bearish than anticipated. So shorter time frame, while this can be showing a little bit of more strength to the upside around $110,000 to $120,000, I'm still expecting a larger wave 4 pullback regardless, no matter what. That is how I'm seeing it. No matter what, I'm still seeing a larger wave 4 pullback. If you pull up all the scenarios, every single one, I mean, doesn't that show some conviction that another wave 4 of a larger pullback is going to be coming? And I'm telling you right now, this is where a lot of people are going to get smashed. And a lot of people are going to still try to fixate their bullish bias position, which is fine because they still do have a chance because I'm still expecting a wave 5 to the upside. That is the absolute pinnacle of how X functions. Everyone is a genius during a bull market, but I can tell you right now, the real genius is going to be the one who is able to weather through the bear market that is going to be happening, and that's what I'm expecting. And if you guys don't know, I was the biggest bull of all time, basically, talking about Bitcoin going up to past $100,000, okay? So if you guys didn't know, we've been talking about this for the longest time. Extremely bullish in these regions here. We were extremely bearish here, extremely bullish here, extremely bullish, extremely bearish here. We kind of missed the timing because we did witness or observe some kind of diagonal being created. Then we got the massive pullback. And then at this level here, everyone hated me because I was calling for a possible ABC pullback here. And I don't know why people were calling for such a strange application of the LA wave theory, but oh well, I mean, it is what it is. But right now, look at how extended this is. Profit taking is going to occur no matter what, and it's going to be very volatile in doing so. Let's take a quick look at the SPX. Looking like it's creating the largest daily candle to the downside on the daily, if it's a closed candle, that is. Wow, it's still going down. That's insane. But be careful out there, ladies and gentlemen. Be careful. I'm telling you. I mean, I've been warning you. I've been warning you. So this is our overall count. I'm still looking for a bear market, or at least one of the largest corrections for the past 3 years. We need one, basically. And if we take it from the perspective of this, it's looking toppy, man. On the macro, that is. You know, a few months ago, it was a different story. I mean, back in August, back in July, trust me, it was quiet and no one was talking about it. And I'm telling you right now, this is a time to be very cautious on these wave 3-4s, all right? But again, we're still expecting this wave 3-4 to be an opportunity, all right? We can see wave 5 extend, and we don't know how far it'll extend. But one thing's for sure, there's still opportunity for altcoins. And I'm telling you right now, this is financial advice. Please make sure to take profits this bull season. I'm telling you right now. I don't want you guys to make the same mistake as everyone else back when over here, basically what happened. Don't want you guys to make the same mistake. This here is what killed everyone off, and it's going to happen again. I'm telling you right now, the 1% is going to survive if they take profits accordingly. Okay, and then staying in cash is a position. I don't know why people hate cash so much, but cash is also a position. This is financial advice. Be very cautious of your positions. If you're in a very strong position, I mean, you guys know me. You guys know my play-by-play as well. XRP, I've been accumulating that shit forever, right? But I still took 50% profits no matter what. And this is the same thing here. And I'm telling you right now, people who are shouting, oh, it's okay, you know, their on-chain data still suggests that we're still going up to $150,000, $200,000. It could, but I'm telling you right now, these people have no idea. And I'm telling you, the number one thing is to check your Twitter, your influencers. I mean, if they started an account that was basically from 2023, block them because those people are still new. They don't know anything about the bull market. They still entered around these regions over here. Maybe they did witness this, but they're still not experienced enough. I mean, for the OGs who survived the COVID crash and also the 2018 crash, the ICO phase, they know my position. They know how I played this out. Everything. We didn't call the pandemic crash, that's for sure, but still, you want to be very careful here, okay? You want to be very careful, especially in times when you're starting to see a possible fifth wave coming in. This is the overall expansion phase. This was the most profitable position. There's no more profitable positions. It's just about maximizing your position now. It's about maximizing your profits, and those are the smart traders who are already positioned either here or already here. These people are probably already taking profits, so there's two like separate categories of who are taking profits. So with that being said, BTC, again, the macro, we are still, or at least I'm still looking at it as a 5-wave move to the upside. And we are now closing in on this intermediate degree wave 3. And that is fitting very nicely with how this is playing out. If you take into account that this is the wave 3-4, now this is the internal 5-wave structure. And as you can see, whether this is a flat idea or whether this is already in, we'll be getting a clear idea within the next few days or so. That this is the nested structure that we've been looking for. We've been the ultimate bulls here. we were capitalizing on this. I took profits around these levels over here. I'm just cautiously waiting now. This is the whole point of waiting. You got to be very patient in this game. You got to be very, very patient. Beautiful pullback though. Beautiful. Congratulations to who shorted the top. Congratulations. Now, what other scenarios are there? The other scenarios is this, which is very unlikely at this point now, where wave 4 has completed. In fact, I would say that this wave 5 is now actually showing signs that it might be complete. Now, this idea is already invalidated. This 1, 2, 3, 4 has already came into the territory of wave 1. So I would say this idea is pretty much out of the picture. The only idea left for a possible wave 3 completion is this, where we had a triangle sideways. This here was the entire sideways structure, and who knows? This could be the actual ultimate wave 4 correction. Who knows? It could be. Huh. Could be. Because if we zoom in, it's looking like a 1, 2, 3, 4, 5 to the upside. Some kind of diagonal ending for a wave C or a wave 5, some sort. And the way we would count it is a 1, 2, 3, 4, 5. Boom. So, is this the larger correction? Actually, it could be, man. I'm going to be monitoring this very carefully because we do have a very nice look for this move being complete as such. In fact, it looks almost incredibly perfect when it comes to the actual right look. And then if you take this into consideration, even more beautiful, right? And then when you take into the consideration of the primary degree, even more beautiful. So is this the larger wave 4 correction that we're seeing now? We're going to be seeing a $75,000 to the $80,000 Bitcoin? I don't know, man. We could be definitely seeing this. This idea looks like it's possibly complete. And then this one. But this idea is now out, so this I would put at the unlikely now. Because it's already invalidated. So now we are resorted down to 3 scenarios. It's either the largest fourth wave is now coming into play, and we're seeing finally a 25 to 30% correction, or we do a sideways corrective move. For C, one more move to the upside, then that larger 3 is in, and then a wave 4 comes in. We got that triangle idea, but again, I'm going to say that this is also unlikely. And then we got the flat idea, right? But I'm starting to put this diagonal idea into play if it gets supported here. Okay? So we're going to put this back into an alternative. Okay? So that means that no matter what, we're still looking for a wave 3 to complete. And it would still maintain a pretty relatively good look for how this would be playing out, right? So we would see this to be the 5th wave as diagonal. And this is very characteristic of what we saw back over here during the massive move to the upside over here. Where was it? Here. Very similar in characteristic here, ladies and gentlemen. Although it was very sharp, we saw a diagonal being built here as well before it actually went for a blow off top, right? The initial move being 17 to 18%. So could this be also a similar move here where we had that sharp correction here, and now this is the ABC to the upside? We have another 3-wave possibility being built here, where this is the ABC, and then we create one more high before the ultimate pullback. This is a very good possibility now. So I would say that this ABC flat. I would say the highest probability is the flat. Of course, this is going to be interchanging with the larger wave 3 pullback because we now do have a technical possibility of a 1, 2, 3, 4, 5 to the upside. Then this would be playing out. If that doesn't play out and we break these regional lows as an impulse, we can find clues along the way. And it's already starting to show those clues that maybe it is the beginning part of an impulse to the downside if we see it as a 1, 2, 3, 4, 5 into a wave 1 or wave A, ABC, maybe a multiple zigzag. We'll see. Wave 4s on the largest of degrees will be very complex usually. So, yeah, I think I called it. Oh, Merry Christmas, ladies and gentlemen. Rest in peace. All right, ladies and gentlemen. I mean, that's what it is. I'll do an update on Bitcoin very shortly on X. So, I'm sorry. Rest in peace. Let's look at the SPX. Oh, what? I think this is officially the largest candle. We'll see. Well, I'm sure there's going to be news around this. If it does, we'll see some news about it. All right, ladies and gentlemen, I'm going to end it here. I'm going to make sure to do an update on the Bitcoin. And please make sure to hit that like button, subscribe to the channel if you haven't already. Thank you very much. Be careful. That's all I'm saying. Be careful. Okay? Thank you very much. See you guys in the next live stream. Bye-bye.